Good afternoon, Scott Redler, T3 Live, Chief Strategic Officer. Welcome to today's recap. So today's Wednesday, and today was an up day after a down day yesterday. At this point, I hate to keep focusing on the frustration that I've seen on my trading floor and the virtual trading floor and the Twitter sphere, wherever it is, just about the action and the lack of continuity, and rightly so. It's not easy. Unfortunately, I came in yesterday, I think I had 7 longs or so, and if someone would have hit me on the head on the way to work and I came back today, I would have made a heck of a lot more money than I did make today, or not. So with that said, the action from day to day has been different and hard to handle, but you've had to either be very, very tight or a little bit looser, and you have to trust certain situations, and they've been hard to trust because every time you look up on the TV set, someone's talking about we're a day or two away from a big crash, or someone's talking about a day or two away from all-time highs. So pick which way you want to go. There have been things that have been showing their face. It's given us some clues on how to navigate and at least be safe. I know that today I came in flat with short in the brain, and within the first 30 minutes, I stopped shorting the market. I said, you know what? Things are holding up. Things are acting different. Don't have short in the brain and turn today into a disaster. Try and flip some gears and figure out how you can get back involved. Continue to provide good content for the VTF. Talk about the positions as well as a lot of the patterns that we put in the morning note or off the charts that have been working. And because a lot of other people were trim and trailing and still in trades, and great. That's why the community's there. Anyway, with that said, let's just start going through some charts, some stocks, and you look here. This was yesterday. Didn't it look as if right here the SPY might break this ascending channel? Because it did look that way. All right, it did look that way, and you had to respect it. Okay, it didn't happen though. So two things could have happened. You could have went home light, or you could have went home heavy short. So if you picked which way you wanted to go, which I was light, then today happened. And not saying today means that we're going to break out and go bull market, rah, rah, rah. But what happened today? We opened up, we reclaimed the 8 and 21 day again, and we closed above the prior 2-day high. So at this point, unless we just do the exact opposite again, which might happen, but you can't keep playing that way, you had to cover some shorts and try and figure out how to get back involved in some plays. And I talked about descending channels. We talked about that in the Qs. And at this particular point, you had your reversal here. We walked through the descending channel on what could take place when we broke through, came back, retested, held where we had to, and now the Qs closed a little bit higher than the prior high. So it's still trending with higher lows, a few higher highs, which is a welcome sight. Okay, because within that welcome sight, you could probably pick 5 to 8 different situations we talked about in the morning call, or the morning call express, on what could happen for nice price action. Things that might actually last for more than a day or 2 or 3. First one, the rockstar status trade, Netflix. Netflix exceeded my targets. I think we talked about this on either Monday and said perhaps we see a move to here within time, and it went a heck of a lot through there. This was the pattern. Here is your buy area, 350, 354. Boom. Okay, today talked about taking profits into 380, saying it doesn't mean it's a short because the market loves the pain trade, and that's what's involved there. If people thought that it can't go any higher, I guess your next real point of reference comes in right around here. If you caught this trade, whatever you took out of it, this was nice and calculated, nice and tight. Bull flag, there you go. Talked about the descending channel in Google, and Google has been working not as fast as Netflix, but it's not the same type of stock. You had an ascending channel that broke to the downside right around here, and now you had a descending channel that broke up. Yes, came in a little bit, held the 200-day, and then right here is where it became a focus again, and now it made a bit of a higher high, and the target we put out there was 560. Amazon, that lowered 299, not a blockbuster type move, but better to be long this 299 versus short it. Now it reclaimed the 21-day, and it still looks like it can go a bit higher if it wants to. Priceline, which people are talking about on the VTF, which I didn't go over as much, it's starting to poke its. It's starting to poke its head above. What did I just press there? Let's see if I can go back. Let me go here. No, I just pressed something that I gotta go back on. Okay. You know what I'm gonna do? Here, you can come on me, Andrew, while I talk a little bit. Everyone likes to hear Red Dog talk, especially since it's the anniversary of the All Access, which hopefully you're on. And now I'm just trying to close this out, and I'm gonna open it back up. Let's see if the chart system comes back up, just to show you how I don't read from a teleprompter, and this is live and taped, and what you see is what you get. And you haven't seen anything yet? No. Anyway, here we go. We'll try it again. Let's see. Hey, there we are. Come back to the charts. Oh, on Facebook. Oh, what a wild ride this one was. You know, this one to me has been my nemesis lately, and I'm hoping tomorrow it makes up for it. You know, we've been talking about this channel that's been driving me batty and some other traders batty. Yesterday tried to break above this area and reverse, so this morning thinking why not try and short it just in case the market's weak. Within the first half hour I was done shorting it, and now I'm actually went home long it. Why? Because poked its head above this, and now it seems as if, you know, maybe it tries to get to the upper end of the channel. So we'll see. If it's down tomorrow, it wouldn't surprise me, but you know, for the way I trade it, you have to try and go with some type of momentum move. LinkedIn, talked about this week a few times. It's not a blaring new type of scenario, but here's your bottom tail and here's resistance. This looks like it can continue up, and that's what a lot of these things are trying to do. They're trying to continue up. There's LinkedIn, Yelp, somewhat the same, lagging below the 200-day. Not something that you should be running to invest in and put in your 401k, but if you are trading and you're looking for some type of moves, this is hanging in there. And if Facebook goes a little bit, maybe Yelp and LinkedIn have a little bit more room if you want to stay with the trade. Another stock that we've been watching that you could put and read in my morning note, and I think one of these days this week went over Baidu, talked about how tight it was getting, and Baidu finally expanded. And you look at Baidu, if you were there today, congratulations. I know yesterday a lot of us tried it and it wasn't working, but today it went, and it still has some room to at least here, if not higher. Nice trade out of a consolidation. It also got some attention on YY. Again, stock that's been broken, stock that you've been selling rallies, but you know, when the markets want to try and come after some of these things, you got to look for some of these descending channels. And if the market rally continues, shorts get squeezed, and then you get some lower level trades. So YY above this, perhaps it could go. So put it on your radar tomorrow. Kihu, the same thing. This one actually poked its head above it. Not with conviction, not with crazy volume, but this is now poking its head above this. Baidu looks good, leader in the group, so maybe some traders and some people come back for these bean down stocks. So this is another potential trade. But these are the things you do with less size. These are the things you watch pretty closely because there's lots of footsteps in them. But if you sold here when it broke the 21-day, you have the luxury of trying some down there. So there are some other spots that could give a little bit of support to this rally. It seems like some of the bean down sectors might play a little catch up, which would lend some support to maybe the Dow or the spiders and or this and that. The banks were a little stronger today, didn't close on highs, but you know, not a headwind today. You look at something like Goldman, you know, so I guess I'm reaching, but you could say that you have a trend line here. You know, your first at least trade above a prior pivot that can continue and at least test a 200-day. Morgan looks a little bit like that. I'm definitely reaching with these, but if they wanted to come after it, that would probably put some pressure on the shorts, and at least it's tight, so we could figure that out. I did buy a little Bank of America back, you know, just because, again, I sold it up here and was done with it there, so I've been trying it a few times and I've been losing. But one of these times, I do think maybe, you know, we get a trade, and that's all it is for now, a trade to retest this area. So if this were to get some volume and get above 1470, this descending little spot could be worth a look for a little bit of higher prices. JP Morgan also, wow, that had a little tail at the end of the day into the gap again. So far, JP Morgan has not been able to fill one of these gaps, so it's still weak, but we'll see. Gold, let's see what that looks like. still in this range. Little bottom tail today. Not much you could really do there. It's still such a random, erratic mess. Erratic or no, erratic, not erotic. Unless you give gold to your girlfriend or something, or wife. Anyway, just kidding. Well, here is your little bottom tail into support. And I guess trade versus today's low if you have to, 123.50, and see if it changes at all. You know, some of the battered casino names, wedging here. So worth a trade, perhaps. It's still hovering on the 200-day. Jury's out, laggard, bad trend, but if you're looking for a trade, perhaps it happens here if the market holds in. So all we try and do is put in perspective some things to do if you're trading. If you're looking for P&L, if you're trying to create alpha, if you're trying to stay somewhat safe. This week you actually had more follow-through and more price points than we've had in the past few weeks. We've tried to point out a little bit of the differences for when things felt different, where you could actually stay in something for more than a day, day and a quarter, where instead of just doing a red dog reversal on a low, you see some commitment to it. Maybe you could actually buy it higher. You know, the descending channel in the Qs was a telltale. I know the Russell is still weak, but I just wouldn't be overly focused there. You know, the whole world, I think the media found something new that they could talk about because they didn't really know about the Russell last year. I don't know, whatever it was. Yes, it's weaker, it's holding in here, but if you shorted everything out there in the stock market today because the Russell was, you know, off a little bit, you lost money elsewhere. Maybe if you were short here, you made some money, but yeah, here too, you had to be sort of perfect that it closed, you know, off the lows. That looks to me like a lot of choppy mess, like a lot of things. So what you could do is you could stay away from the choppy messes, because you don't need to, if you were playing blackjack and you were, you know, if this was considered blackjack, you don't need to, you know, take the hand that's dealt to you. If you get a 7 versus an 8, not a great hand. You get an 8 versus an 8, a little bit better, but not a great hand. You get a 6 versus a 10, not a great hand. You might as well take the hands that, you know, you have a 10 versus 6 or an 11 versus a 5. Ooh, that would be a good double down. Play the probabilities. As a trader, you're allowed to pick and choose your hands. You're allowed to say, I don't like that 2 versus a face card. I'm going to pull my money back. And you also have the luxury of the trader to say, oh, look, an 11 versus a 5. I'm going to bet a little heavier on this hand because probabilities say maybe I get a 10 and maybe if I don't, the dealer could still bust. So I hate to put analogies with Vegas or with gambling, because I hate gambling. I don't gamble. I don't like to go to Vegas. I don't like to. I present for Schwab and things, but I don't think you can get rich in any of those situations. I'd rather be in the market every day. At least we have our hands on the keyboard. We can control what we do. Can't control the dealer. That's me babbling again. And what is today? Today's Wednesday. Hopefully you're over the hump. Tomorrow is Thursday. We have a really big, nice holiday weekend in front of us, Memorial Day. So try and keep putting it together. Try and keep making progress. Keep the frustration level down if you can. And happy anniversary to me. 1 year. Let's hope in 9 more I'll be back and we'll have a little bit more gray hair, a little less hair, and still be doing the Ironman. In 10 years we could talk about that anniversary. And if you're still watching me then, all the more power to all of us. Have a great night.